Welcome to Shadow of Truth with your host, Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And today is Monday, August the 29th, 2016. And this is our Monday market update. And we appreciate everybody being here. Thank you so much.
So I see the stock market has popped up. The S&P's up 0.5%. The Dow's up over 100. To be honest, I didn't really see any economic news that would warrant stocks going up today.
Or any day.
Well, any day for that matter. But the economic reports that were out this morning were, neutral and negative. If anything, they're probably more on the negative side.
Well, I mean, do you think this is an overflow from that stellar report from the FOMC last Friday?
Oh, you mean you mean Jackson Hole, the Jackson Hole?
Yeah, Jackson Hole, yeah.
Well, I think that's what's really going on here is the dollar yen. The yen is gone down over 2% versus the dollar since last week.
That's a lot.
And that's the dollar yen is the lever they use to manipulate the stock market and to manipulate the precious metals markets.
Yes.
Yeah. So on August 26th, which was Friday,
yep,
the dollar yen was 100. So it was basically at what they call parity. And now it's at 10. It's a little bit over 102. So the yen's dropped 2% over the weekend versus the dollar. That's a huge move, and that's why the S&P is up, because all the hedge fund algos that key off of the dollar yen, they're dumping yen versus the dollar, and they're moving into stocks, and they're probably also selling gold.
Well, might as well get rid of that. Get rid of all their gold. I mean, there's
no reason to have real money, but they don't have real money. They have paper gold in the form of futures. So they have fake money all the way around, unless there's any hedge funds that actually own physical gold.
Yeah, and speaking of gold, what about that action on Friday with the straight down followed by a straight up, and then just a continual bleed out Friday afternoon on gold in particular? Silver was similar in reaction, but I just thought that was just blatant criminality right in your face. And Jeff Nielsen had an interesting theory on what happened, in that obviously the down move was the Western algos going to work based on the information coming out of Jackson Hole. And Jeff believes that perhaps there is a stronger, bigger algo coming out of the East, either China, Russia, or a combination, that said not today. And if you look at that straight down and straight up, and it went higher, I mean, gold went significantly higher, and silver was up around 19, I believe. I mean, it was like just,
I think it was actually straight up and then straight down. So it went straight up around would have been around 6:30 East Coast time, 4:30 Denver time, that's about an hour after the London gold fix. And there must have been some sort of news report out that triggered the straight up action. I don't know. I didn't really, as the August days wear on and we get closer to Labor Day weekend, I kind of tend to pay less and less attention to the directional movement of the precious metals, because they almost always go down in August. It's the slowest period of the year. Whether there's algos here or algos in the East or whatever, I don't think it really matters. It's the paper trading is what's dominating. It's dominating the action in gold and silver right now, and it's predominantly paper trading out of New York and London, because the Eastern Hemisphere is kind of in their last period of quietness before their big seasonal buying really kicks in. So, I mean, in all truth, gold and silver have held up better this month than I would have expected.
I think they're doing just fine. I haven't had an ounce change in my vault in quite some time. Each ounce is still 1 ounce.
Well, if anything, I think you should be using this opportunity to to accumulate physical gold and silver if you have money to do so.
Yep. There's a lot of people that seem to think that there's going to be something really nasty coming this fall. We've heard this. We've heard this before, and this sentiment. This isn't anything new, but it seems to be a little bit different. Have a little different flavor this time around, especially with all the people, all the big names that have been moving into paper gold and possibly even physical gold, over the past few months. And it is an election year, which always brings instability. And with Brexit just happening, I mean, what do you think, Dave? I mean, do you think that we're in for a pretty rocky ride for the rest of the year? I mean, it seems like it to me anyway.
A rocky ride in terms of the market volatility, or
Yep, or just in general. I mean, it's we've got wars that you and I talked about all last week that are getting very unstable or becoming very unstable, and just everything in general globally just seems to be very out of balance at this point. And you have all of these big moves that are happening. Like I said, these big name investors that are coming into paper gold and possibly physical gold. That's usually a telltale sign that something is really wrong. At least that's historically.
well, I think things are really wrong in the Western Hemisphere more so than the Eastern Hemisphere. It's interesting because um, Jim Rogers gave an interview last week, and as you know, I think I mentioned to you, I've been, and I just sort of went public with it a few weeks ago. But I had been thinking that if you had a way to invest in short-term Russian treasury bonds, which are paying 10%, that you should do that, because at some point the really smart money is and big money is gonna figure it out, and they're gonna start moving money into Russian assets. And Jim Rogers gave an interview over the weekend, and he said, I'm buying Russian treasury bonds. He goes, the yields are outrageously high, and I wish I could put all my money in yields and find yields like that. So he's been investing in the Russian stock market and the Russian government paper, and that's what I've been saying. Because Russia is for as much as the Western media propaganda smears Russians' economic situation, their economy is on much more stable footing than the U.S. economy is for many reasons.
Well, they don't have near the debt that we have. Nobody has near the debt.
No one has near the debt that the U.S. has. I mean, everyone's pointing at Japan, or they're pointing at China, blah, blah, blah. And he addresses that. He said, look, China's got a lot of debt, and they're going to have to work through it. But China's going to be the country to watch in the 21st century.
Period.
And, we already know that.
Yeah.
He wasn't telling us anything we don't know. But just to circle back to gold, he also mentioned that he holds a lot of gold.
Physical gold.
But
right.
To get back to gold, it's especially volatile in the last couple of weeks of August, because that's typically when, in terms of the global gold money flows, the East is still a little bit asleep ahead of their big seasonal buying period, and our markets are quiet. And it's very easy for the manipulators to manipulate all the paper markets in the last week, and really the last 2 weeks, but especially the last week of August. I mean, this week I expect to see a lot of volatility in the markets and the metals.
Is that because everybody's on vacation? They're getting their last hurrah in for the season?
Right, exactly. Now, there was something interesting that was reported by John Brimlow's Gold Jottings, and that was that the delivery volume on Friday into the Shanghai Gold Exchange leaped up to 51.8 tons.
In one day?
Well, Thursday it was 29 tons, and on Friday it was 51.8 tons.
My God.
And also the ex duty, the Indian ex duty premiums on Friday were they're still below the legal kilo bar import point, but it's the most gold friendly reading we've seen out of India in terms of the ex duty premium, which is really, it's an ex duty deficit right now because it's below where they can legally import, but it's high enough. The price of gold over in India is probably high enough for doré bars. In fact, he mentions that. He said in the afternoon, based on the afternoon reading, which was a minus $12.30, doré imports would have been practical. And we know that smuggling is rampant right now over there. So, and his comment was that India and China seem to be waking up, and that's what I think is happening.
Well, I mean,
So I would expect to see, they could take gold a lot lower this week. I don't know, because it's still mainly just the paper manipulators operating. But I think over the next 4 to 8 weeks, I think we're going to start seeing much higher prices of gold and silver.
if India wakes up the way and their gold moves back above board and they start importing like they traditionally do or historically have done during the next 4 to 6 weeks, then gold could really have a very massive move. I mean, couldn't it? I mean,
Yes, absolutely.
and if China uh, im, continues to move, 51.8 tons of gold in a single day, that is just that's hard to even fathom that volume of gold. I mean, I know it's not unusual, but it just seems like an unbelievable amount at this time of year and right now with everything going on. There, it comes back to one of my favorite questions. Where is it coming from? I mean,
Well,
it's
that's why I think the price of gold is going to go a lot higher. I think that they're starting to run out of ways to source physical gold to move into China and India. I mean, they squeezed Ukraine, they've squeezed Venezuela. Um,
and Libya.
well,
Those
Libya
are
was a while ago, but yeah, I mean, but recently they squeezed Ukraine, they squeezed Venezuela. I think obviously they've hypothecated and rehypothecated all the gold sitting in London vaults many times over. I mean, I'd still love to see a wide open look at the GLD vault and do a serial number accounting. I saw an article on Zero Hedge, and I didn't read the details of it, but it sounded like um, the Netherlands central bank refuses to give a serial bar accounting of the gold in its vault, which tells you that's been hypothecated. So, and people don't have to believe that the gold has been hypothecated, but by the time they find out that it's been hypothecated, it'll be way too late. You know?
yes, it won't matter
Right.
because the criminals will have it in their own private vault and see you later. Get out of here.
Right. So in terms of gold, I mean, it's somewhat oversold right now, but it's not ridiculously oversold. However, I'm just looking at the RSI. If you want to go by, the usual mainstream technical indicators, the RSI seems to be turning back up a little bit. I mean, it's right now, it's below its 50-day moving average. Historically, when we've had a big move in gold, we get an occasional 200-day moving average, and that could happen. I don't know. I don't think it can happen at this time of year. I think if this was late February, I'd say, probably maybe hedge a little bit if you want to trade it, or just go away for a couple months and don't look at the price because they might take it down to the 200-day moving average. So, and we went below the 50-day moving average on gold toward the end of May, and it actually went quite a bit below the 50-day. It went about halfway between the 50 and the 200, and then it rallied again. So we'll see. I think every time the Fed comes out and says they're going to be raising interest rates, like Fisher did on Friday, I think they lose more and more credibility.
Oh, you mean they still have credibility?
They're still, they have credibility with the trading algos because that's what was driving the price of gold on Friday. As soon as the headline from either Yellen or Fisher would hit the tape, gold would get hit. So
I don't see how anybody could listen to anything that they have to say. I mean, it's just nonsense at this point. I mean, I understand that as far as the big money, the hedge funds, the institutional money, and all that, that's what they have to listen to because of the way that their books are made. But it's like those guys have to go into their meeting rooms and just laugh at some of what's going on and what's being said. I mean, because it's so ridiculous. What's going on with the housing market? You've been doing a lot of reporting on that, and we were on the phone earlier before the call, and you were out riding around looking at falling prices and price reductions and for sale signs everywhere, painting the landscape.
well, I mean, Denver's gone from one of the hottest markets in the country to, again, I haven't seen data for this month, so I don't know exactly how many homes are actually being sold and closed on. So, for instance, if you drive by a for sale sign and see a pending contract sign, that house hasn't sold yet. They're still waiting on getting financing.
Which means it could fall through.
Means it could fall through. I've heard of a couple homes recently that fell through because the buyers couldn't sell their home on the other side for the price they needed to get to make their contract terms on their purchase work. I think that a lot of the activity at the middle to lower end of the market has been driven by flippers, and I heard from a real estate professional. She said, some of these flippers control 8 to 10 homes, and they're going to get stuck with those homes, especially as volume dries up. I know volume's drying up in Denver because I'm seeing, for sale signs pile up in areas that I haven't seen them pile up like this since 2008. And these were the areas that I used in 2008, ahead of when the mortgage market really crashed, to tell people, look, housing's going down. And I'll say it again now, housing's going down. I spent the weekend at my significant other's house in an area that I haven't seen for sale signs in her area, her little specific area where she lives. I haven't seen any for sale signs in 9 months. And now I was driving around there a little bit yesterday, and there were several for sale signs that had been put up recently. And if you're looking to sell a house, putting your house on the market at the end of August isn't the time to do it.
Yeah, because you've got school and
Well,
various. You just have a whole world of things that are going on.
right. This is one of the lowest seasonal. We're going into one of the lowest seasonal periods of the year for selling homes. It's just the opposite of the precious metals market. We're going into one of the highest physical buying periods of the year. But I think that there's a combination of people who may have taken on homes that they ultimately couldn't afford, and they're getting worried, and they're putting their house on the market. And I think there's also people out there who are starting to see the same things I've been talking about. Again, I was early the first time around when the big bubble popped. But I think a lot of people are starting to see the writing on the wall, and they're trying to get ahead of the pack, so to speak. Well, I heard about someone who was trying to get ahead of the pack last December in Miami. She had a $1.5 million high-rise condo, looked out one day and saw a bunch of cranes in the skyline, and she and her husband put her condo on the market. Well, guess what? It's still on the market.
Wow.
And now that we see, Miami is the condominium market there is essentially crashing. Vancouver,
Yeah,
according to what I read, that market's crashing. I've heard Toronto's starting to crash. San Francisco's starting to crash. So it's all coming home to roost. For about a year there, it looked like this real estate market was like Jack's beanstalk. It was gonna go up to the sky, and all of a sudden, someone sprayed a lot of Roundup on the beanstalk because it's gonna start crashing.
Well, and that eternal optimism is shared here in Nashville. And I was talking to my neighbor who is pretty heavily involved in the local real estate, and apparently his real estate agent told him that the outlook for Nashville was very high, and that what is being passed around is that they see the Nashville market as on a steady footing and upward until 2020, which is 4 years from now. And I think you commented, Dave, that is the one of the main signs of a major bubble.
Oh, absolutely. I think the people who are saying the outlook is high, I think they were high.
They must have been out there in Denver.
Yeah, they took a visit to Denver on a pot holiday.
A pot tour.
There's actually travel agencies that's what they arrange. They arrange
Yes,
pot tours of all the dispensaries.
that's what it was. It was the Nashville Realtors Association did a pot tour and came back and then reported to my neighbor about that. I don't see it. I mean, and the thing is that I keep asking, where's the money coming from? Where are the jobs? I mean, I've been hearing for months and months and months from various sources that there's 100 people a day moving to Nashville. And this thing, I ask them, whenever somebody says that to me, I ask them, where are they getting the jobs? What kind of job are they getting? Where are they getting the money for to afford these? Now median house cost is around $200,000, and most of them that I see are well over are close to 300,000, if not above 300,000. And then once you get into the upper market, where I'm starting to see, price reduced signs. They're sitting on the market a little bit longer, and all of these other little subtle signs that I think we've discussed before. I mean, it's ridiculous. I mean, what kind of job is out there that's going to produce an income that will support a $2,000 to $2,500 a month rent or mortgage in today's market? Unless you've got a good paying job, you're not going to be able to afford that, period. Not
Well,
only,
there's some government jobs that probably do that. It was interesting because I had to take my car into the shop last week to get serviced and get brake pads replaced, and so I took an Uber ride home, and it was sort of a middle-aged woman who was driving, and I started chatting with her, and it turned out she was a government worker and quote unquote had health problems, so she quit her job. And she was telling me about her house, and it turns out she had a house that was in a really nice part of Denver. And actually, this part of Denver, if you drive through there, you'll probably be pretty shocked at how many for sale signs are up. I mean, the average house in there is probably $700,000-800,000, and
oh my
there's
God.
just for sale signs everywhere. But she had a house. She has a house in this area, and there's also some areas where the homes are more like 500, 600,000. They're way older homes. I think she lives in an area that hasn't been scraped yet and rebuilt with McMansions. But again, her house is still probably $500,000-600,000. And she told me, first of all, she's driving for Uber, and in order to make ends meet with her mortgage, she's renting out 3 of her bedrooms in the house.
Wow.
Yeah, but the point here is, people have government jobs, they can probably buy a pretty nice house because the government's, especially if it's healthcare related, because that seems to be where, if there are any jobs that are being created, truly, that's where the jobs are being created. But it also sounds like Obamacare is starting to fizzle out. It sounds like a lot of the insurance companies are pulling out of the network, and so that's going to pull the rug out from underneath Obamacare and a lot of those healthcare jobs.
Yeah, they're all going away.
Right. So in terms of what are the jobs that are being produced that are going to produce incomes like that? Well, I don't know. I guess if you're a housing flipper. Oh, wait, that game's coming to an end too.
Oh, yeah. See how that works?
You got companies like Cisco laying off 20% of their workforce. I know Wall Street's laying off big time. That's why the Hamptons in New York and high-end New York City prices are crashing. So, telling you, it's all going to come to a head in the next 3 or 4 months, I believe.
So that's what I was looking for right there.
Yeah. And just to kind of circle back here again with gold, everyone's freaked out. Well, guess what? Since mid-December, Gold is up 24%. Now, you show me any asset class that's out there that's up 24% since mid-December. Oh, wait, silver's up even more than that. And I didn't calculate those numbers. Let's just focus on gold. Since early June, gold is up 9.5%.
Since
So
early
you're
June.
talking about 3.5, under 4 months, gold is up almost 10%. I mean, we're going to get a pullback here, and this is a part natural pullback that we're seeing, and it's part manipulated. And the fact that it was ready for a natural pullback made it easier for the manipulators to manipulate it lower. So going forward, let's just wait. Let's just see if gold can hold the 50-day moving average. I don't know if I think it. I think it will. I think it'll bounce back. But you don't have to jump into gold right away just because it sold off a lot. Wait and see if it climbs back over the 50-day moving average, and then jump into it, because then you're probably going to go a lot higher from there.
Sounds like sound advice to me. Well, I guess that's as good a spot as any to end on, don't you think?
Seems like it to me.
We can actually end on a positive note for a change.
Oh, I can pull out some doom and gloom.
We got plenty of that in the first 25 minutes. So,
hey, it's Monday ahead of a holiday weekend. Everyone needs to have a good time, chill out, take it easy.
That's it.
Enjoy what you can while you can, because I don't know how long we're going to be able to keep enjoying this.
Well, we're just going to keep smiling and keep doing it. And I guess we'll pick it up on Thursday and hopefully have something bright and cheery to talk about.
Well, we'll see. It'd be interesting to see if we'll have higher gold prices to talk about or lower. I think it could go either way this week. It wouldn't surprise me if we're lower, though.
Okay. Well, we'll look for that and report back on Thursday.
On the other hand, it wouldn't surprise me if we're higher.
Well, you have a good week, Dave, and I will talk with you soon.
Speak to you later. Jackson Hole, the Jackson Hole.
Jackson Hole, yeah.
Well, I think that's what's really going on here is the dollar yen. The yen is gone down over 2% versus the dollar since last week.
That's a lot.
And that's the dollar yen is the lever they use to manipulate the stock market and to manipulate the precious metals markets.
Yes.
Yeah, so
welcome to Shadow of Truth with your host, Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And today is Monday, August the 29th, 2016. And this is our Monday market update. And we appreciate everybody being here. Thank you so much.
So I see the stock market has popped up. The S&P's up 0.5%. The Dow's up over 100. To be honest, yen versus the dollar, and they're moving into stocks, and they're probably also selling gold.
Well, might as well get rid of that. Get rid of all their gold. I mean, there's
no reason to have real money, but they don't have real money. They have paper gold in the form of futures. So they have fake money all the way around, unless there's any hedge funds that actually own physical gold.
Yeah, and speaking of gold, what about that action on Friday with the straight down followed by straight up?
Honest, I didn't really see any economic news that would warrant stocks going up today.
Or any day.
Well, any day for that matter. But the economic reports that were out this morning were, neutral and negative. If anything, they're probably more on the negative side.
Well, I mean, do you think this is an overflow from that stellar report from the FOMC last Friday?
Oh, you mean Jack on August 26th, which was Friday.
Yep.
The dollar yen was 100, so it was basically at what they call parity. And now it's at 10. It's a little bit over 102. So the yen's dropped 2% over the weekend versus the dollar. That's a huge move. And that's why the S&P is up, because all the hedge fund algos that key off of the dollar yen, they're dumping